I'm I'm doing something wrong because my attorney says, Vinny, you got to list everything what you are doing. So there it is, alternative tax strategies during uncertain times and smart tax strategies, like I just mentioned. And again, this is Vinny Chopra in front of you. Disclaimer, it's a legal accounting or investment, not at all. It's for entertainment and educational purposes only. Does not represent an offer to sell or solicitation of an offering to purchase or anything. The session will last 1 hour, and I hope you stay and ask me lots of questions so that I can answer also. And we will like to give you a gift. I have written 3 books. Let's just go into that. Who is Vinny Chopra? You might ask me. I'm an engineer, mechanical engineer from India. I came to United States with $7 in my pocket, an MBA I did from George Washington University, sold educational books and Bible door to door, and husband for 45 years. Our 2 children, Neil and Monica, they right there. Previous California broker for 20 years, bought first family, single family rental 40 years back, a duplex, and many single family homes. I've started 11 companies and have done 42 successful syndications and funds, principal lead sponsor, which is not with somebody, but myself being on the loan and everything. And then, of course, purchase, manage 7,500 apartment units, all GP interest on loan and principal worth 1.3 billion, and podcast host of Apartment Syndication Made Easy, 2 live shows I do every week. So I appreciate you joining me. Hopefully, I can give you lots of great nuggets and ideas, everything. So this is me right there. I've written 3 books: Senior Living Investing and Apartment Syndication Made Easy, Positivity Brings Profitability, then my 2 shows and my podcast there. And these are the books. So you'll all get a free copy of my books, digital as well as audible also, so that you can listen to it in the car, in the gym, when you're exercising, things like that. You can access my bestsellers on Amazon, of course, Kindle and all, or digital and audio. Just go to vinnychopra.com, free book, only 1 book, you get all 3 right there. So that's this. And then again, this is the one, the page comes to this one, you get free copies right there. Okay, that's my inspiration, my family and charities we work with. Let's talk about, high income earners legally pay less taxes by really doing tax advantage investing, leveraging IRS approved strategies. And that's the beauty of it. W 2 income or capital gains, which you get passive or active, you could really combat them, get them canceled out so that you can reduce your taxes by owning real estate yourself directly or passively. Of course, if you're husband wife and if the wife has real estate status, many of the doctors try to do that. That way you are able to, get the whole income. Husband wife joint return becomes real estate professional that way. Active income and passive income gets together, joined together. Wealth preservation is a big one, hard earned money to be able to save. And then long term growth is the big, big thing. So, primary strategies on W 2 tax burden, what I have found myself over the years, because, so much accelerated depreciation, many of you might have heard about them, and bonus depreciation with President Trump coming back now into the office, he's able to give 100% bonus depreciation right there in that year you spend the money in improving the real estate. So that's the real estate side. And accelerated depreciation, what is that? That's a cost segregation which breaks down the real estate assets into components, small, small components, 5 year, 10 year, 15 year, 27.5 year. And the CPA can take all of those deductions right in the very first year, or 5 year schedule, we call it. Hotels, especially, are amazing investments for lots of high earners because they give you significant deductions. We are the 15-year property classification and allow 60% bonus, and unused losses can be carried over. That's the other thing. I was interviewing a friend of mine who is a CPA, real estate CPA, over 30 years. He said, Vinny, you could carry forward your losses, whichever you couldn't take in 1 year, passive losses, active losses, you could carry them over for 20, up to 20 years. So that sometimes people miss it. If they change a CPA from this CPA to that CPA or the other CPA, if they don't capture the losses, the not used losses from year one to two, three, four, five, and you get a good gain after fourth year or fifth year of sale of a property, real estate, I'm talking again. But again, because that's what I have, but I'll share some other ideas too about taxes, which will help you all. Section 179 expensing is a big one. I hope you're utilizing it. If you do have some business, a lot of my followers are entrepreneurs, doctors, attorneys, they have businesses and things. So immediate deduction power with 179, 100% immediate deduction comes in for the furniture, fixtures, and equipment furnishings of the my senior livings that I do a lot of senior livings, and also for the hotels. I used to buy a lot of apartments, but as you know, with the interest rates being where they are, the property taxes being too high, the insurance costs being too high, just the cash flow is not there in the multifamily or apartments, let's say. But as the interest rates come down and the insurance costs come down, of course, there will be some room to go back in there. A lot of people are in trouble, in that market. Strategic business applications, substantial deduction limits, 1.22 million. You might know that. Implement requirements. Then qualified opportunity zones are also great way to save taxes. Qualified opportunity zones are in different parts of the each state metro areas. And what it is that you could defer your capital gains tax prior investments until 2031, 26. Invest for 10 years and you don't have to pay any. So I'm not a CPA or an attorney, but I'm just trying to bring these ideas to you so that you could really look further into. ChatGPT is amazing. ChatGPT, Google search I used to do now with ChatGPT, Perplexity, and Grok. I mean, it just puts so much in your fingertips right away. So if you need to find out more about qualified zones, there are maps, there are things you could look into more there. Self-directed retirement accounts. There, I want to spend a little bit more time because what happens is Wall Street and Main Street, I call it. Wall Street is up here with all the stocks and ETFs and REITs and all those all the different funds and all. But self-directed retirement accounts are taking the money out of the Wall Street and putting into Main Street right there. So there are custodians like Equity Trust, like Premier Investments, IRA, Forge Trust, Advanta, U Direct. There are lots of different Advanta is one. A lot of them are there, but you could take your IRAs and self-direct them, or solo 401k plans, or enhanced QRP, EQRP, business friendly retirement plans, to convert them into checkbook control, they call it. So taking out of the Wall Street, putting on the Main Street, now you could invest that money in syndications, in funds, in fund of a fund, and all kind of things you could do with your retirement funds. And the beauty is, if you have self-directed Roth IRA means, many of you probably know, where you pay taxes one time and you convert that rollover into Roth, then all the gains in the Roth, you never ever pay any taxes whatsoever. Again, I'm not a CPA. Please talk to your CPA or attorney, but lots and lots of wealthy people save taxes that way. And it's also 1031 is another way. It doesn't say here, but you could buy real estate and do 1031 to kick the can down the road, we call it in that case. But let's go here. Oil and gas syndications are also amazing, but please look and do very, very good due diligence what the operators are, what's their track record, how much have they drilled before. I like the fund. I invested my money. My next door neighbor also invested almost $1 million in that oil and gas syndications where they raise money, but they do many, many drillings, not just one oil drill well. If it can be dry, your money is lost. But again, you should do a lot of what you call it due diligence on the operators and their track record, and then give your money, because you can get almost 70 to 90% deductions for the real W2 income. By the way, oil and gas investments give you almost 100% plus also double your money, which is a very, very good thing. I'm not an expert in it, but I do some seminars with some experts if anybody's interested. Charitable trusts are another one. Charitable trust and planned giving, you could really, like I have Janus, I think, endowment fund, where I could put money into that, into making more money with the same money, and then they could give to non-profit organizations all over, whichever I tell them. You could take the deductions 100% in your taxes, but you disperse the money even next year or year after or the year after. It's amazing. I just put like 100,000, I think, and it became 200,000. And then we are giving to charities and all that. So charitable trusts, again, remainder trusts are different. Charitable yeah, lead annuity trusts. I don't really, I just want to give you some ideas, but I don't endorse any of these, just to let you know. I just want to give you some ideas right there. Then health saving accounts are there, HSAs, flexible spending accounts, FSAs. You can go to the maximum and let the money grow there. And then college savings plans are also there, tax strategies. Now, rental real estate professional status, as many of you probably already know, if you spend 750 hours per year in a real estate activities, more than 50% of your total working time spent in real estate, material participation in the real estate activities, and detailed documentation of time and activities you keep, you qualify for a real estate professional status, which I am, because that's what I do on a daily basis. And then it's in offset by other earnings and my other things like that. So additional strategies to reduce adjusted gross income, again, retirement contributions, trying to put as much as I kind of like that self-directed vehicle, but I also like the Roth IRA much better than when you have to take money out like in 72 and a half or something like that. But let's see if you have some questions for me. I would love to just kind of summarize what I just mentioned to you all, and then we'll take some questions and I'll show you some more things. uh, Real world tax deduction impact analysis, bonus depreciation in hotels up to 60 to 70% of the investment in first year. Then second year, if they're doing more renovations, like in one of my deals I'm doing right now, I'm purchasing a Marriott Courtyard hotel with my partners. And, this is in Dallas, north of Dallas, if anybody is from there. Passive income, then oil and gas, Section 179, solo 401k contributions, right there, levels are there, opportunity zone investments, charitable trust, and all that. So the key thing is, if you can annual tax reduction of 100,000 through strategic tax planning, you could really be saving in a 40% bracket or 35% now, plus the state taxes, almost 40% you could annual savings you could save, which 10-year, that's 400K, but the compound value of money, all the money you save today is worth more today than 10 years from today. And that saving of 40,000, you could invest into vehicles, which it can give you 8%. Like I just said, 8% here in this diagram, 8% over 10 years. This 40,000 annual savings of 400 could amount to 1.2 million compounded value. So it's a pretty strong feeling to really be able to do some good tax planning. I say, I'm not a CPA, but I do tax planning with my CPAs, my companies, different CPAs. We have 5 CPAs work for my companies, for taxes and all. Implementations have accredited and optimized legal structure. That's a huge one. I have 132 LLCs, 132, because I've done so many different deals, transactions, and all. So optimizing legal structure is big. Tax reduction is the first strategy, and protecting and optimizing legal structure is the other one. Final thoughts, wealthy keep more money. Taxes are your biggest expense as a high earner, but the wealthy don't just earn, but they keep more of it. I hope you like some of the ideas, but the thing is that you want to run a tax saving analysis and have some schedule, some not with me, with your journey, the CPA or tax advisors, you may like to dig into that more. In my case, interested in passively investing, if you want to, I have a beautiful fund, Investors Club. I've done lots of great deals for different senior livings. I built like these ones. I bought hotels like these. And then also apartments, I'm not doing anymore that much today, but I used to do lots of apartments. But if anybody's interested, love to have you text me. We could provide you some information, what we are buying and selling and so forth like that. Also, if you like to even come to my sessions on Wednesdays. I do mastermind 4 p.m. PST to 5:30 PST, and that's at EST 7 p.m. to 8:30 every Wednesday. Also, I teach and have my students come, and we talk about deals and underwrite deals and lots of good questions. 1.5 hour I spent doing it for 7 years almost, and that's my Zoom vinnyzoom.com, password is Vinney. So vinnyzoom.com, password is City. And then, if you're interested in joining, learning from me also, that's another one. So it's the same thing right there. And please do scan this or just go to vinnychopra.com, free benefits or free book. It will get you my books and all that also. So let's go here. My team also put together another very nice. Oh, wow. Oh, I hope I have it over here. Yeah, right there. So we were trying to, see real estate syndications and funds are really big. Lots of investors put money into it. Multifamily senior living hotels offer strong cash flow, tax advantages, depreciation, all those things, appreciation and bonus depreciation via cost segregation, like I was just saying. And common structures are 506C offering from the SEC world. I wrote that book also, Apartment Syndication Made Easy. But exemption regulation D, 506C offerings can they can advertise, they can get accredited investors, as many as possible, and the REITs, alternatives, and fund of funds, like I mentioned. Oil and gas, I mentioned that. Residential assisted living, RALs. Now, that's something I didn't cover in my other part. I just now residential assisted livings are also very, very big as 10,000 baby boomers are turning 65, retiring daily in USA. It's a recession resistant with premium private pay tenants. And then the Yeah, large tax deductions through accelerated depreciation because you're furnishing the home. You're just kind of, doing the whole thing. So uh, I don't know if I could show you here. I will show. Let's see here. Zillow's. Uh, I just REL. Let's say, and let's say desert. Oh, Gene Drive, Gene Drive. Let's just do that. Gene Drive, for example. So maybe this is the one. Let's say, oh no, Gene Drive, you didn't say. No, this is not it. This is not it. This is the wrong one. But anyway, but what I wanted to show was that some of these things, RALs are good opportunities. You can make almost 7 to 10,000 per month, but it involves lot of. I do webinars on those also. I do about three webinars a month, and so forth. So opportunity, we talked about that. Private equity, venture capital. Many people like to give to private businesses. That's another way. ATM funds are there, car washes are there. I don't have any of those, but self storage syndications are there, and they are low overhead and recession resistant. Life insurance based investments, IULs. I don't really promote any of these, but these are vehicles that you can really get you to save on taxes. Then gold and silver, boy, gold and silver is going through the roof. Precious metals, everything. So that's another way to, hedge your net worth, because dollar today will not have the same power tomorrow and 6 months and 12 months. So it's good to have your money be invested so that it's making more money, making more growth of money, I call it, or velocity of money. Velocity of money. So the private debt, a lot of my friends I know, they give out money for bridge loans, hard money loans, real estate backed debt. Those are some different avenues, alternative strategies that you could use. Regular interest income comes in, and so forth. And then structured notes are there, hybrid investments. Again, anybody you give money to, please do full due diligence. Who they are, where they are, what's their background, all that. And it's not that you want to make money, but a lot of time it's very risky, very risky. So you want to make sure that you are looking at all the angles to make sure that it's going to make it, good for you, good for you. I mean, not lose the money, but make money, dividends and all. Oh, crypto is sky high. My gosh, now, blockchain projects are there, also high risk, high reward kind of. But one thing I just can't believe, how do this, demand and supply keeps the price of Bitcoin going up. It's a limited supply. I do understand that, but the same coins are getting to be like, it's like 118,000 or whatever. It's mind-boggling. Farmland, timberland, tangible assets with long-term income and appreciation potential, collectibles, luxury assets are there, wine. Some investors love that, art, wine, watches, invest into those to grow their income and taxes and so forth. Self-directed, I did talk about quite a lot. Charitable trust, donor advice funds, I mentioned, and then bonus depreciation strategies. All those things are there. Key considerations for high income earners, focus on tax advantage cash flow. So let me just kind of stop it over here and kind of field some questions. That will be amazing. Hello there. Hi, Akila. Nice to have you, John J. Sahara right there, and Vivek Ji right there, and Jason and William. Please ask any questions. Let's see in the chat. Do we have any questions? Yes, we have some couple of questions. So, hi, Vinny. Okay. Oh, we'll get that, John, to you. Sorry about that. We'll get that recording. And then, are there ways to structure brokerage investments or withdrawals to reduce tax burdens? Are there ways to structure brokerage investments, okay, or withdrawals to reduce tax burdens? I would say if I understand the question right, John, what I would say is that ETFs usually the exchange traded funds, you know, yeah, index funds have the lowest fees, and they don't really sell or buy that much. You know, they keep the stocks intact. Their charges are very low. So if you're asking, to reduce the tax burden, we do have the short term within 1 year. We are, oh, yeah, can you do utilize tax loss harvesting techniques? Oh, Vivek ji is asking. So I would say one thing for sure. See, I love real estate for a reason. First of all, I can get a leverage. I put only like 1 million, but I get loan of 3 million from the bank and 75/25. Now I can control an asset of 4 million. But if I put 1 million in stock market or in my mutual funds or on the Wall Street, I only make profits on 1 million. In real estate, I can buy $4 million deal and grow that 4 million to 6 million, let's say, in 3 years. Now the bank only wants their, you know, the money they gave me. Okay. So 1 million I put in and 3 million they gave me loan, but now the value is 6 million. I just need to give them 3 million back and 1 million is mine. The profit is totally mine. Of course, if I lose anything, I have to make sure I have to pay the balance of the loan and everything. So the leverage is very, very important. And on top of that, we get cost segregations and the building depreciates it's a paper loss, which we don't have in stock market. It's minus 3,000. That's all. Even if you lose 1 million today, you only can deduct 3,000 each of the years unless you make profits that gets batted against your losses. From what I understand, I'm not a CPA, but from what I understand. So tax burdens can only be brokerage investments, structured brokerage investments. Again, John, I'm still kind of meddling on that, your question. Of course, syndications are structured, but you said brokerage investments. Syndicators are usually private placement, like people like me and others who find a great deal, a hotel, a car wash, or apartments, or senior living, whatever you say, right? And then they raise money from limited partners, LPs, GPs, bring the deal. They are on the loan, they have the risk and everything, but they bring the money from like minded people, investors, LPs, limited partners, and the limited partners get for 100,000 investment, maybe 50,000 minus as passive losses first year. Many times I've given even 75% loss first year. And then if we are doing more renovations and depreciation is a paper loss. It's not a real loss, it's a paper loss. Bonus depreciation is a paper loss. So let's just go further into it. Otherwise, I won't be able to get everybody's. Are there ways to, okay, how often should someone be meeting with a CPA? I would say for tax advisor, every quarter. Every quarter is a good strategy, especially if you're buying and selling a lot, especially if you're buying a real estate. Please, please, please do talk to your tax CPA or even tax advisor, who could be the same person, who can give you some really good ideas if you need to buy and and hold or sell things like that. So I really like that idea, tax advisor in uncertain times. Vivekji, John, you can utilize tax loss harvesting techniques. Okay, beautiful. Utilize the tax loss harvesting techniques. I like to chat GPT that and see harvesting techniques. Thank you, Vivek, and examples of the techniques. Oh, don't you have to give interest back to the bank? Oh, yeah, 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 yeah. You have to give like the interest on the loan, definitely. But when you pay the interest out of it and principal pay down. What I meant in that was the gain of 2 million or whatever it is, you are paying the interest definitely on the money because we borrowed the money. But what I meant was the capital gain, the bank will not ask you to share any percentage of the capital gain. The capital gain is all mine for $1 billion investment, which is capital gain at $4 million asset. That's what I meant there. So don't you have to give interest back? Yes, 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 you do. And then we have and staying. Okay, I think it's just moving quite fast example of the techniques. Don't you have to interest back? And on staying well leverage, how can I balance liquidity versus tax efficiency in uncertain times? John is asking. Again, these are the questions you have to kind of do the underwriting. I always believe that Excel is the best friend because you can put down all the assumptions. As a matter of fact, in ChatGPT, if I may share that, I put two scenarios of some kind of question came to my mind. Should I invest in this much? This is the ratio. This is the interest rate. This is how much down payment I'm going to be doing. This is over here, and the option B. I put it in Chat GPT, and it gave me a whole solution right in front of my eyes. It was amazing. Please try that. You know. And on staying and leverage, how can I balance liquidity versus tax efficiency in uncertain times? See, liquidity is for again general partner like me, I have to have a lot of liquid assets because my loans get approved once they see the financial statement, of course. But the liquidity is a big factor also. 10 months, 6 months, 8 months of the mortgage needs to be in liquid form, could be in stocks and mutual funds that I can sell, things like that. So, Vivek is answering. Vivek, I'm glad. Depending on the account, you can get leverage on stocks too, margins, leverage, of course, options. I mean, a lot of people play options. I don't play options, but you're right. You could get leverage on stocks. Also, portfolio margins are there. You bet there are. Need 15% investment better than real estate. Well, yeah, you're right. Definitely. I think average on the stock market is 8% or so, I heard. But of course, if you buy margins and you're good at it, the big thing is in stock market, I think you have to be fully involved in the deal. I know it's 441, no problem. Hey, I would love to share a deal. Got it. Thanks. Very nice. Very nice. Anybody's got some questions, please put it in the chat. Love to answer those. And I'll make sure that Asma is able to send the recording of this webinar also to all of you. I would love, if possible, to kind of share with you, like this was the hotel. Oh, this is what I've been building. I thought I'll just gonna share everybody. Again, senior living is a great asset if you have inclination about it, but I've been building them and I would love to kind of share a little bit. Where is the oh, I'm sharing. Am I sharing? No, no, I'm not sharing now. Okay, there we go. Now I'm sharing. And I would love to put the music also so that you all can see. So this is something that I was standing under the tree right there. We bought 7 acres of land and we built it. So let's take a
Cape
look.
Coral features the only 77,000 square foot, one-story facility in the area. At Hampton Manor of Cape Coral, our residents get the daily support they need while remaining as independent as possible. We extend our highest level of service, value, and quality, everything you are looking for in an assisted living community. All award-winning meals are created just for you by Chef Larry DeLuzio and are served restaurant style. With 3 gorgeous garden courtyards, residents can enjoy our in-ground swimming pool, putt-putt golf, or the beautiful rock formation waterfall. Our stylish beauty salon will have you looking glamorous in no time. Our activities calendar keeps you on schedule and in the know. Our luxurious spa allows you a tranquil place to unwind and de stress. The club room is designed for some hearty pool or card games, and right around the corner is our private library. Enjoy afternoon snacks and entertainment in our poolside bistro, or a relaxing conversation in our sitting room overlooking the waterfall courtyard. The Modern Theater invites you to indulge your senses in a delicious bag of popcorn and your favorite movie. The spacious sunroom invites you and your guest to take in an afternoon of conversation or perhaps a puzzle or card game. Our activities room will be filled with bingo games, trivia, and arts and crafts projects for creative minds. Or enjoy watching a game show or the daily news with your friends in the social lounge. We offer 89 spacious apartments featuring private or courtyard views, kitchenettes, and equally spacious restrooms, and the ability to control your own room temperature. Whether you like a
So we have been building these, and I'm very proud of that. My partner and I have built lots of them, and then also into the hotel. Oh no, into the RALs. I was going to show. I didn't get a chance, but that's the single family home conversions into senior living, where 8 or 10 seniors can live in one single family home with 8 bedrooms or 10 bedrooms. The other thing which I'm finding a lot of good cash flow nowadays are hotels. I bought this hotel actually in Texas, Hilton Garden Inn, for $6 million, sold it for $12 million, and made 6 million profit. Then we bought this beautiful, nostalgic, Casa de Palmas, Wyndham Garden trademark. And this was also bought at a like if from the bank, which is another asset that I'm buying today, right now. This was a very, very nostalgic hotel. All renovations were done. We bought it together, my partner and I. We did it. And then the best part was when I saw the capex of $4 million that this bank had put in renovating everything, interior, exterior, the dining rooms, the bar, the whole area, everything was amazing. So we said, okay, we'll buy it from you. And there it is, capital expenditures. If I can make it a little bit bigger, this caught my attention right away. This went into foreclosure in 2017. They put $3 million in renovating all the guest rooms. In 19, 2 years later, they put another 560, 90,000. 2020, they put another million. I got involved, my partner and I, in 2022, and the asset manager, she was working on this to put chiller air conditioning replacement, which I had done it in my apartments. I knew it's going to cost 365. I told her not to worry at all. We'll take care of that. And that just sealed the deal. We bought this 165 keys hotel for 13 million five, and we're selling it today for 17 million in 2.5 years. So I've had some really good wins, in the hotel industry. So I just wanted to share, since we have few minutes left. If there is more question, please raise your hand. I'll come back to you right away. But we are buying this Courtyard Marriott, and it took us almost 7 months to get it from the bank, but we did get it now. And 35 offers came, one winner. We are the winners, my team, my partner and I. We are buying for 14.5 million. It's 65% below replacement cost. And very good area of the north of Dallas, Plano, Texas. Limited supply, prime location, value add. So we'll be changing the interior from generation 2 to generation 6 standards of Marriott. And we have a 20-year agreement of the flag. So it's a beautiful, and we are putting top golf in there. Of course, we'll do cost segregation and recession resistant, everything, everything. So just to give you an idea, this is how it looks now. Very nice. It's cash flowing right now. We will never shut it down. We'll do the renovations wing after wing after wing. And we have done it many, many hotels. My partner's office is 10 minutes away from this location in Plano. Frisco is next to Plano in Texas. That's where his office is. So this is how the rooms look right now. By putting 4 million of money, we're going to convert these old style rooms into brand new, like this one right there. That's how it's going to look. Very beautiful, new fixtures, new color schemes, new drapes, new carpet, new everything. That's going to become all 153 rooms. Beautiful, brand new. And the front will be changed also to something like this. It's going to be a beautiful, beautiful hotel, which will sell in 4 years to 5 years, buying at 14.5 plus 4 million into it, 18.5 to 29 to 32 million it will sell at. Brokers tell us. And we did do the NOI, our projections. It's very reasonable to sell at 29 million. That's what we projected in our case. But this is the top call if we're going to put it in and so forth. It's a 506C for accredited investors only. That's how I can kind of talk about it in my presentation, which is public presentation and so on. So it's a structure very similar to like other people, 30-70 split. We are giving 70% ownership to our limited partners, and general partners will keep 30%. We have the loan already secured, 13,394,000, and we'll be on the loan. The what's that? Limited partners will not be on the loan, and they'll be able to 2x their money in 4 to 5 years. So almost like 20% return per year to 25% return per year, plus cost segregation, minus K1s, and all those things, all those things. So if anybody is interested, please text me and we could send you the pitch deck. Or if you put it in the chat, just put your email address, then we'll be able to send that to you. It's a beautiful, it took us long time to buy it, I know, and we are purchasing it, 60-day close. But inside it's got beautiful, everything is good. We're going to keep it running. We have our own internal renovations arm and also our own management arm. So we are vertically integrated. We are totally, we buy the assets, then we renovate them and we manage them daily basis. So we have lots and lots of experience in those. So investment strategy, financials, everything is right there. Oh, this is where it is right there. I was looking for that. So anybody who is might be interested, if you are interested, if not, that's okay. Don't worry about it at all. But like first year, we are projecting to give our investors 8% for 100,000, 8.78 second year, 10.53 cash flow third year because renovations will be done next year, in 2026, and then 12%, then 13% or 14% almost. Very conservatively, we have planned this. Almost 53,000 will be cash flow distributions paid out quarterly on 100,000. And when we sell it in the middle of 4 and 5 years, we are estimating gain of 47,000, equity gain, we call it, because the price would have gone from what we put in 18 million to 18.5 million to 29 million. It might go 34 million or 32 million. If it does, 70% of that comes to the investors more on top of this. So this number is based on 29 million exit, which is a very fair number, very conservative number. So we'll be doubling the money of the 100,000 investor. Same thing for 250. We have tier investing. So that way 500 and then a million and so on. So investment strategy is there. If anybody needs this brochure, love to share that with you all. It's a beautiful location. Dallas is the hub. I mean, it's just everything is panning out very nicely in metropolitan areas. This is kind of old. Dallas is even grown a lot higher, lot more than now, before those statistics were there. Innovation hub, talent generations, aviation, aerospace, even the third airport, they're expanding already, which is the north side of Dallas. And Dallas is so convenient for headquarters. Then you could go either side of USA, equal 3 hour flight either way. So digital infrastructure is happening. Global trade is coming to Dallas. We're just so pleased with the whole situation that we won the deal by giving $500,000 hard money, non-refundable, to the bank, and we'll be closing in 60 days. So please ask any questions if you may have. Please raise your hand, then I can. Any more questions here? I see. Depending on account, you can get. Okay, that was Vivek, right? And Mitu. Hi, Mitu ji. Got this. Okay, Mitu ji का भी question था कोई? Oh, hello, Mitu Datta ji. Don't you have to give interest back to the bank? Yes, yes, yes. You always have to pay interest on the loan, definitely. So think I don't know why this whole situation came like that. You do have to. What I meant was that the gain, the capital gain that any real estate asset brings to us, like in this case, in this hotel, we could loan is only 13 million five or 600,000, right? So when we sell for 29 million, of course, the debt, the interest payment is given. It's interest only loan for 5 years for us at 8.7, 8.25% or something. So we'll be paying that from the cash flow of the hotel. But when we get the gain, we don't have to take the interest out of there. It's just a pure gain. Then we pay the principal balance of the loan, then rest is total money, right? That's what I meant. Alrighty. Anybody else has any question? Need to be true to meet the projection. This. What needs to be true to me? Hello, Mitaji. Yeah, yeah. I'll show you. Needs to be true to meet the. We have very conservative people. So in our underwriting, if you do text me, I could show you the whole underwriting, our whole projection, performer, how we will increase and decrease the expenses, increase the cash flow. I'm glad you said that. I'm glad, Mituji, right there. For example, in this brochure also, we give you full comparison of all the, rentals and lodging market, all that. We provide everything in this packet. But financials, this is what you're looking for right there. So essentially, this hotel was bringing $6 million. What? $6 million were coming before COVID. During COVID, it went down to 1.151 right there. Departmental profit went down, way down. And the whole money, 5.9 or 6 million, went down to 1.6 million. And then the owner tried to survive and increase it, but couldn't get to 6 million. Next year, he got to 2.4 million, you know, the operating revenue. So that's when it went into foreclosure, right about here. Bank has owned it. They hired the outside company, and then they increased the revenue to 4 million, then to 4.7, 4.5, 4.8. That's when we started to talk to the bank right at about December of last year. It's 7 months later. We have the deal now, and we are buying it because we know this should be with the new generation 2 old antiquated rooms to new generation 6. The average daily rate is going to increase, the occupancy is going to increase. That's what we have done in our underwriting. If anybody is interested, I would love to show you in a Zoom meeting. Each individual investor who would like to find out will show you all the background numbers, why we feel 29 million it will be sold at. We'll tell you all about it, show you. And actually brokers are telling us, Vinny and my partners, hey, it's going to be 34 million. You mark my word today, it's going to sell for 34 million because we are buying it so cheap. That's the beauty of it. Anyway, so this is the deal right there. I would love to answer any more questions if you guys have. If you don't, I really appreciate all of you joining. And please do get the free books and all that. Got it. Thank you. Thank you so much. What needs to happen? And sounds good. Thank you. Thank you so much. Thank you so much for beating with me. God bless you. And we'll make sure, John, Jason, and John, we'll make sure that all of you will get the recording of this one and the last one also. Thanks so much. God bless you. We'll see you again. If there is any question, please raise your hand. I'm still here. Thanks. Bye bye.